Hello, everyone. This is Rob Golfi with RE/MAX, the Golfi Team. Welcome to the Golfi Real Estate Show, Hamilton edition with Rick Zamperin.
Yes, welcome once again to another exciting edition of the Golfi Real Estate Show. Of course, to get your home sold and to get it sold for top dollar, more importantly, if you are a seller out there, go online to robgolfi.com. That's Rob, Golfi.com. Call the #1 RE/MAX team in Canada. That is the Golfi Team, 905-575-7700. We're seeing a little bit of a different market now than what we did even a couple of months ago. You got to call the Golfi Team to get your listing in front of so many eyeballs. 905-575-7700. Follow the Golfi Team on Twitter and Facebook, TikTok, Instagram. They are dominating the social media scene here in Hamilton, Burlington, Niagara, Brantford. If you have a question or a topic idea you would like Rob to discuss on a future show, send them an email, questions@robgolfi.com. We have a jam-packed edition of the show today. We're going to talk about the whole buying versus renting debate is back in the limelight because there is a how to get rich star who is suggesting that one is going to make you wealthier than the other. Stay tuned for which one that is. We'll talk about Canada's office real estate sector and how it could be heading for a reckoning. Should you, if you're selling your home, should you be at your home when the home inspection is occurring and the buyer is there? We'll answer that question for you as well. We got a bunch of stats that we're going to unleash on you as well. But I hear, Rob, a little birdie telling me that the Golfi Team has done it again, a record-breaking sale last year. Tell us what happened.
Oh, yeah. On Jerseyville Road, we sold a house for $4,250,000. Now, we did have it for sale earlier, and we listed it, it was over $5 million, and we were hesitant on taking it because we felt that the price was a little high, but they were willing to work with us and take time. So over the course of the last 6 months, we were getting action, but just nobody making an offer. So the agent on my team, she was handling the listing, and it was her listing, and she goes, Rob, I think we should lower the price, hold offers, and see if we can get multiple offers. I go, are you kidding me? At $4 million, she wanted to put it down to $4 million and hold offers. And I go, that is gutsy. And so anyway, we held offers. We dropped the price to $4 million and held offers. I couldn't believe it. Like we had two segments, actually 4 offers total, but there was the first 2, and one was not as good as what our clients wanted. And the second one, actually we got an accepted offer, but financing was a bit of an issue for them. So then we went over at it again. We got and another 2 that came in, and the people that won it got it for $4,250,000. This house, I'm telling you, you cannot build this house for that money. You cannot find a piece of property. This is a beautiful estate property. You have to see the pool area. It's just the way it's set up. And I mean, they've got a climbing board for climbing. They got a little sunroom for planting. They got a shop on there. I'm telling you, it's just gorgeous. And the people that are going to be moving in this summer are going to really, really enjoy and having a lot of fun with this property. It is the highest one that's sold in Ancaster, and I think even in Hamilton this year. So it was good. It was exciting. Very exciting.
That is pretty good. What else is happening in your real estate life this week?
So the market is busy. It's slowly climbing. It's being steady. But things are moving along. Multiple offers are happening, but they're not being crazy where people are, again, jumping in over 100,000, 200,000. So we could see that month over month, things are moving along. And I even sent you the month over month since January this year. So things are really moving along. And I think that the only area, so Hamilton, even unit prices are moving along, so more people are coming into the marketplace, which is really good. And the benchmark price right now in the Hamilton surrounding area is $750. Now, the average sale price, obviously, we have those numbers also, which is higher. And it looks like in Burlington, they're also climbing, and they've hit back over the $1 million mark from January. So look at this. In January, Burlington, the benchmark price was $760,000, but only 114 homes sold that month. Now you go all the way, and it kept climbing through the February and March. Right now, we're at $1,068,000 benchmark price in Burlington, which is probably right, and 286 sales. So that has been incredible. Now in Niagara is a funny market. Now, what's throwing off Niagara is Niagara Falls. I found Niagara Falls also has Niagara has more inventory of homes, which is good for if you're looking for an investment property or just a property for yourself. Is a good time to go there because they've got I think they've got 11 weeks of homes available. So anyway. So all in Niagara, right now it's sitting at $665,000 benchmark price. That's climbed up throughout in 614 homes that were sold in all of Niagara. Then Brantford, it's at $649,000. Again, moved up 158 sales. So things are moving. I still believe that we hit bottom. I know CMHC thinks, there's still going to be, we haven't hit bottom yet. I don't see that. I truly feel that we are always going to have a steady growth of real estate appreciation for the next 5 to 10, 20 years just because there is a shortage of real estate. And it's there's no other way to do it. When you have a shortage of anything, demand goes, there's always going to be more demand, and then prices go up. So, but people are hesitant right now. The government did a good job of slowing down inflation, and so things are moving nicely at a good pace where people can get into the market and find something that is suitable and affordable for themselves.
It's interesting in terms of the percentage change when you're looking at the benchmark price year over year from April 2022 to 23. They're all pointing downwards. The price went down from last April to last month, but month over month, March to April, when you look at Hamilton, Burlington, Brantford, and St. Catharines, and even Niagara, or Niagara Falls, they're all up in terms of the percentage change when it comes to that benchmark price. And here in Hamilton, it went from $657,000 to $676,500. And, at the end of the day, this is, good for home sellers. They're getting a little bit more bang for their buck. Home buyers, they're still getting a better deal compared to last year, and there's still some inventory out there as well.
Absolutely. So, and interest rates are holding. So, interest rates, they're holding. Prices are moving moderately, but very comfortably for the market that can handle. So timing is good. If you're seriously looking for a house right now, it does come up. There could be a possibility of a competition, but here's the thing about looking for these houses is if it's overpriced, do not be afraid to go in on it based on real value. So my son Phil is looking for a house. I think he's being a little bit too picky. I don't know, but but there was a house, and I said to him, just in the last two, he says, "Dad, what do you think of this house?" I says, "It's great." And he goes, "I go, what do you think it's worth?" He says, "Probably 1.5, and it's listed at $1,650,000." I go, "Then go in at 1.5, state your case, show them other comparables that it's worth that much." They probably know it's worth 1.5, but they wanted to try and see if somebody's willing to bite at 1.6, and they may just go for it. And then he says, "Oh, just wait a little longer." And then somebody else ends up getting it for the price that he was thinking about. So I don't know. And he's missed out on two that he could have probably had an opportunities on, because once you see the sale price of it showing up on the system, and he's thinking, "Oh wow, I could have got that. I should have put the offer in." So I don't know what's going on. But there's a couple that he's missed, and I'm the one that's pushing him. I'm the one that's pushing him to keep going and put the offer in and do it. But who knows? Who knows?
And, that's coming from, let's call Phil an experienced and successful realtor. And he's, second guessing the market, wondering what else is out there. And I'm sure many other home seekers have that same mindset.
Well, you know what it is? He knows the market too good. That's why it's giving him a hard time.
Right.
You know what I mean?
Yeah, yeah.
When you know too much, you become too analytical about it. Just do it. Like I told him, listen, that house is going to be worth double in 10 years. So who cares if you paid 5, 10, 20,000 more? Right. It's going to be double. That's so right. That it'll be made up from there. But anyway, I mean, he'll find it. Hopefully by within the next 60 days, we could say, hey, congratulations, you found a house, and we can announce it on the radio. Eventually, people that are listening are going to say, when is this kid going to get a house? He's busy working and helping other people find houses, though.
Yeah. We got about 90 seconds. Hamilton's real estate market this spring has really proven to be resilient. Why do you think that is?
It's affordable. It is affordable. The GTA buyers are still coming this way, because I'm still seeing, realtors from Toronto coming this way. I was just talking to one yesterday. He submitted an offer on a property that we had, and they're still coming, and it's going to be a continuous flow of people coming down that Queen Elizabeth Way and buying real estate down towards the Hamilton, Brantford, Niagara region, just because it's more affordable. And so as more people come into this country, they move into the GTA, maybe because of the jobs. They stay there for a while. They get to know the province, the city, and they say, hey, let's move towards Niagara. The jobs maybe are coming out that way. But that's what's happening, and it's not gonna stop. And this flow has been happening for the last 15, 20 years.
Still to come, we'll talk about listing differences in Hamilton and Toronto when it comes to square footage, and we're also going to get into home inspections and office real estate in this country. But let's dig down deep into this one, because this is a very intriguing topic for I was going to say weeks, but really for months. We've been hearing about how the housing market is down. Prices are going to be suppressed. Not many homes are going to be sold. You can forget about open houses. They don't work anymore. You're really somber news in regards to real estate. In saying that, Rob, and you've been seeing this for a few weeks now, bidding wars, multiple offers, more and more people coming to the table to say, I want that home. And in some cases, they're going over the listing price. So on one hand, we're hearing the doom and gloom, but on the other hand, we're seeing the reality that the market is very healthy.
It is very healthy, especially in Toronto. I mean, there's more money, more people there, but it is. And surprisingly, like last year, what we went through, we had a huge boom in the first quarter, and then it was just a steady decline from April all the way down to December, and then boom, we landed. And now things are moving along, and if you price, I got to tell you, if you price your house what the market value is, chances are you're going to get that or more, and there's a high probability you're going to get more than that. But if you overlist and start chasing the market down, and you're just going to end up hurting yourself financially, and you will lose money and leave money on the table. So you got to be very, very careful how you put your house up for sale, especially in this market. Now, last year in the first quarter, it didn't matter what you priced it. You just put it up, and you had 50 people wanting that same house, and everybody was just throwing money at the table. Now, some people that did buy those houses back in the first quarter last year, they were paying the price now. Some of them are trying to get out, and some of them can't, just because their mortgages are higher than what the value of the property is. Now, the people that have money, some of them have said, listen, I'm willing to take the hit. There's nothing I can do about it. I'll just move on and just deal that up just with economics and bad luck and whatever. But and now they're seeing those same people that got out of the market. They seem to get out at the wrong time. They're starting to see multiple offers on houses. So they're going, I can't win. They're always one step behind the market. And but houses are going fast. And they are selling full price or more, and so the market is doing very well, and I think it's going to continue doing well for the next 2 to 6 months.
You mentioned GTA buyers and referenced what is happening in Toronto with more people, more money. back in 2017, which is not that long ago. I mean, 6 years ago is not a great amount of time, especially in the real estate game. But we really saw a huge boom at that time because a lot of the GTA people were saying, "Hey, wow, Hamilton's a great place to live. Let's go live there. Oh my gosh, look how affordable the homes are in comparison to what we're paying here in Toronto." And then in the early stages of the pandemic, with the remote work boom, again, a lot of people in Toronto, the Mississaugas, Bramptons of the world thought, wow, I can live anywhere and go to work virtually. Let's sell our house here, move to Hamilton, cash in. Are we still seeing that to a certain extent in terms of the GTA buyer realizing that they could still cash in at a bigger price point and come to Hamilton and bank some of that home selling price that they were cashing in on in TO?
Absolutely. And actually, the GTA buyers and their agents are the ones that are actually pushing the market in outside the area. So they're coming here. So they're selling their property wherever in the GTA, right? So let's say they get, $1.8 million for their house. Now, for $1.8 million, you come towards, the Hamilton, Brantford, Niagara region, you can get yourself a way better house for the same amount of money, which they're not planning on doing. They're looking at downsizing, and they're using that 1.8 to buy something maybe at 1 million or 900,000. Now, when they're doing that, but the problem is they come with their agent. Their agent's going, wow, this is a really good deal. They're comparing in their mind. The house in this area versus GTA, and they're going, this is a really good deal. But they're not seeing the way the market is here. They're not seeing what the values are here. They're just saying, hey, this is a good deal compared to Toronto. And that's what's hurting the Toronto buyer coming this way. So their agents are pushing the market up here. I mean, it's good for the sellers here, no problem. But they're overpaying a lot of these Toronto buyers when they're coming here. Now, if the Toronto buyer comes to Niagara, comes to Hamilton, comes to Brantford, and uses somebody that lives and works in those markets, they're not going to be paying as much as if they were bringing their agent from Toronto. And so and that's what's done a lot. The demand, and there was more demand because of the GTA buyers. Now, if we didn't have these Toronto people coming towards this area, I don't think the market would be as high as it is today. I really don't. But now the floodgates are open. That's what's going to happen from now on. And you're going to see an exodus of Torontonians coming towards this way for the next 20 years, just because as the aging population goes, people are getting jobs, people can move, whatever. Now, if somebody cannot leave Toronto and not live there and work someplace else, they will, because the cost to live in Toronto is so expensive. Unless you're making, 6 or 7 figures, it is getting expensive out there.
Should mention this, and we've discussed this on the show before as well, is, if there is someone from the GTA listening to this program right now and thinking, wow, I'm going to go to Hamilton, or Ancaster, or Burlington, or even Niagara Falls, it is important, and we've touched on this many times in the past, it's important to get a local realtor, someone who knows the market, someone like you, Rob, or anybody else on the Golfi team who knows the ins and outs of what happens and what makes this city tick, and where are the good places, where are the bad places.
Oh, absolutely. Yeah, absolutely. There's people that bought in Hamilton on streets that I would never sell anybody to unless they grew up in that neighborhood and say, hey, listen, I know this neighborhood. Hey, my buddies live around here, and you know what? Hey, that's fine. But if you're from out of town, there's no way I would sell you a house in that neighborhood, even though it's affordable. I would say, listen, there's a lot of crime on this street. There's a lot of things happening. You may want to reconsider it. It's up to you, but you got to be very, very careful what you're buying. And I know a lot of people, a lot of Toronto buyers, they have bought in Hamilton in neighborhoods that they would never have bought if they knew the neighborhood. So so this goes for everybody, no matter what city, what town that you're buying in. Make sure you use the agent that is from that town. Don't use, somebody that you're bringing from your own city, and like, he's not doing you a favor, he's doing himself a favor. So just hire somebody that lives and works that area.
If you want to sell your house or you are in the market to buy a house, call the #1 RE/MAX team in Canada, the Golfi Team, at 905-575-7700. Online at robgolfi.com. That's Rob, GOLFI.com. Canada's office real estate sector, it's really getting hit with a double whammy because not only do we have higher interest rates, but we also have fewer and fewer people these days compared to 5 years ago in the physical office space. So they're really getting hit from both sides.
Oh yeah, and they're taking a huge beating when it's coming to this. So, like they say, some of the high profile there's defaults happening, such as Brookfield Asset Management defaulting on $750 million in loans, and a couple of Los Angeles towers in the U.S. Now it's changing. This is changing, and you're going to find, because more people working out of their houses or they're working hybrid. So, like for instance, in remote areas, a lot of people that were working in Toronto now are working out of their house. But if they can't work out of their house, they're renting shared office space, and they're going into these little tiny office spaces in their little, remote towns and stuff like that. So now what it's doing is these big office towers are going to be half empty. Now the value is based on how much income you have on these commercial buildings. Now, I always looked at these buildings and say, hey, I'd love to have a building like that. It'd be something proud to own. But I'm so glad I don't own anything like these big office towers. Not to say that I'm rich enough to buy one, but I'm just saying that I you know what I mean? Like, it's, you dream when you're driving around and you're seeing these office towers. But now people, I'll tell you, people that own them, they are wishing they just didn't buy anything as big as they have, and it's going to cost them a lot of money.
I can only imagine. The owners of these huge towers, many of them are half empty, if not more, and they're thinking, well, now what do we do?
They're going to have to do something. Oh yeah, they're gonna have to convert them into something different. They'll come up with something. There's always a solution. But somebody goes broke before that solution is come up with. But there'll be some kind of way of getting income from these office towers in one form or another, because they have to be creative. Now there was one guy, and there was a guy in New York City. He bought this office building. I don't know how many years ago. I read this story, and I'm not sure if we mentioned it on the radio. And it's in the square, whatever you call that, the main center city area there, where all the flashing lights and the digital billboards. He was the first one, so he bought this building, and in order for him to afford to pay the mortgage on this building, he put up like a 50 or 40-story digital board that it's like a big TV, and he was the first one. So then it's Times Square. It's in Times Square. And then everybody else started doing it. Now it's mandatory in Times Square. If you buy a building in that area, you have to keep these big digital TVs, whatever they are, there. Like when you walk, I went to Times Square I was there earlier this year. I couldn't believe it. Like, you're walking there, you see these high rises, and you see digital boards the size of buildings, like 10 stories, 20 stories high. You can't believe it. So that guy had to do that to generate income to afford to build it. But now, because it became so like an area of tourism, they now do all the buildings around it. And now when you walk there, you're just looking around and you see all this advertising. But it looks pretty cool when you're there. But hey, you got to do what it takes to keep your value of your property as much as you can.
We got 3 minutes in this segment. I want to move on to a Netflix show. It's called How to Get Rich. And one of the stars of the show, or the star of the show, Ramit Sethi, is a self-made millionaire. He's the latest to weigh in on the renting versus owning a home debate. And he's saying that home ownership is overrated and you're going to get much wealthier by renting. Do you, Rob Golfi, agree?
You know what? He's a big stock investor. Now, I don't feel that way. I'm a big real estate investor. Now, he obviously forgot about Blockbuster stock. he obviously forgot about, was it Bre-X that went? What was the other one? Was that Bre-X that went to nothing? So here's the thing. If you got a good stock portfolio, not a problem, but you're banking on somebody else that managing not only your money, but a company that, if they're not smart, they can actually, the company can go from worth billions to worth nothing. Now, just like Blockbuster, I like brick and mortar because I'm in control of it. I have it here where I am. If I'm not a good manager, yes, I will pay the price and I will lose, and if not taking care of the property and not managing the tenants. But I have myself to blame for. But if I'm good at what I do and I take care of it and I have it, I've got an asset that's tangible. It's brick and mortar, and everybody needs a roof over their head. So why not invest in real estate? Now he's got his case, I got my case, but I'll tell you, I like to debate with him right in person, and I know I can beat him on that because I'll just throw Blockbuster at him, and then he won't have anything to say.
We also did this topic on the show a few months ago, and it was basically, millionaires, mega millionaires who've made a lot of their millions through real estate. And I'm not sure they could have said that in the real estate market. I know it's been good over the last little while in the market, but when it comes to real estate, it has trumped the stock market. That is for sure. We've pointed to the stats on this show many times. House prices double every 10 years. I don't know if your investments have doubled every 10 years. In fact, I would probably say that there's no way in heck that happened in the last decade.
No, absolutely. And you know what? It is the greatest investment, the best investment, and you will not regret doing it.
Well, a very interesting question about home inspections. So you're selling your house. The home buyer wants a home inspection. You agree. The question is, should you as the home seller be present when that home inspection is being conducted? Rob, what do you say?
No, it is not a good idea because you've got a home inspector that's poking around at your house, digging in, going through the attic, going through your closets, checking everything out. There's nothing more nerve-wracking than somebody just going through all your stuff. It is not good. It is not good. And the other thing is, and here's the other thing is, a realtor, when he's representing the buyer, he's usually there at the home inspection, and usually the buyer is there with him, and then the home inspector. So they're going through the house. Now, if the seller says to his agent, "Hey, I want to be here when these home inspector is here because he's just one of those guys that just can't let it go, has to be there." the realtor of representing the seller should be there, because it could cause problems, because the home inspector may say one thing, and then the seller is going to say, he's going to defend it, he's going to argue it, he's going to do things, and then things get out of hand. Now, the proper way that is supposed to be done is the buyer agent should be at the home inspection. And truly, this is through the Real Estate Real Estate Council of Ontario says that the listing agent, that's representing the seller, should be there at every home inspector. Now, most agents don't do that. It's usually the buyer agent there with the home inspector and the buyer. Now, if you are an agent and representing a seller and you know that the homeowner's not going to leave the house, that agent should be there on site to make sure there's no conflicts, no arguments, nothing like that, because things do happen. And but yeah, the home seller should never be there. That's final. I do not recommend them being there. That could kill the deal.
So they are allowed to be there, but you're not recommending they should be there.
Yeah, I don't recommend them being there. And if they are going to be there, the agent representing the seller should be there, just to make sure that there's no any conflicts or any things that are, arguments are happening because they're poking around. It's an invasion of privacy. I'll tell you that. I wouldn't want to be there because it's better you're not there. You don't see it. You don't feel uncomfortable about it. Just leave for 2 or 3 hours and you come back and it's done. And then they firm up on the deal, and it's good to go. But if you're there and they're nitpicking, they say, oh, it needs caulking here for the windows. You need to do this. You need to fix this. You need to fix this. Those are just minor things. But the homeowner is going to feel attacked, and he's going to feel, you know what I mean? So he's going to defend it. He's going to fight, and arguments are created that way. So I do not recommend to be at any home inspection at all.
We are seeing many more home inspections now compared to when the market was just going nuts. Are we seeing more home inspection failures and readjustments of how these deals are being done?
Absolutely. A lot of deals are being, broken, or what do you want to say, not coming together because of home inspections. Now, to me, if you're a good realtor, when you do a walk through a house, you look at the key components. One, you look at the foundation. It seems like it's pretty good. So, but that's where you need the home inspector to see if there's any structural problems. But if you know the furnace is old, the hydro panels got fuses. Okay, you know that before negotiating. You know the roof needs work. If you know all those things, a good realtor will point that out. So as he's going in to negotiate the deal, they have that into a factor. Now, if you're coming back with a home inspection saying we need a new furnace, well, you knew that the furnace was old, so why are you trying to renegotiate that? Like, you knew that you have to get a new furnace. Or the shingles, you knew that the house needed new shingles. You could see it from the outside, so why are you coming to me saying we need new shingles? You knew that when we negotiated. That's the thing that I don't like. But deals do come together if you have a good realtor that points those out during negotiations. And then the only thing you should be looking at is structural. If there's something going on with the property that could affect structurally or even the attic, maybe there's mold, we didn't see it before. Those kind of things are the ones that are deal breakers. But let's not talk about a furnace that you can see, or let's not talk about a roof you can see after the home inspection. You can tell. I walked up to a house just the other day and I said, hey, those shingles look like they're probably 20 plus years old. They go, yeah. And I go, okay, no problem. As long as we see that, everybody sees that. And I'll mention it to the buyer and buyer's agent saying, hey, this house needs new shingles. So please don't come back with the home inspector saying we need new shingles.
Yeah. So in Niagara Falls, one of the bigwigs down there, the executive director of the Niagara Falls Canada Hotel Association, is, quite miffed because he says that Niagara Falls is inundated with illegal vacation rental units in almost every neighborhood. And I could imagine that has an impact on the hotels in Niagara. What are you hearing and seeing down Niagara Way?
Yeah, I didn't realize how many there were. Like, they're on Airbnb, but somebody hired somebody. This guy hired somebody and found 1,284 vacation rentals that are active in Niagara Falls. Out of that, there are only 16 that are licensed. And so that is hurting. It does hurt the hotel business in Niagara Falls. And I get it. I understand it because that's their industry and they want to keep it strong. And I've always said, when you're buying a rental property or any kind of property, make sure that the long-term rent will carry the property, so that if you can't if the short-term rent doesn't go through or you get stopped, you got the long-term rental rate that you can carry the property and keep owning the property. A lot of these people, I'm going to tell you, that own these properties, they're going to go after them. They are going to go after them, and they're going to shut them down. And they will not be able to carry this on a regular rental. Like, they bought these based on Airbnb short-term rentals. So let's say a house would get $2,500 a month rent, right? Or $2,300. Airbnb, they're probably getting $5,000-$6,000 a month. So there's a difference there. So there's going to be some major problems, especially if this hit the newspapers now. That means these people that own these homes and they're using Airbnb, they're going to get letters in the mailbox.
So what is the impact, knowing that there's 1,284 active vacation rentals in Niagara Falls, only 16 are licensed. So that means 1,200 and 60 whatever odd are not. What is the impact on the real estate market, knowing that there could be many of these vacation rentals in a neighborhood? If there's a home or two in that neighborhood up for sale, is there an impact on how much that home sells for?
Absolutely. So if let's say they all come, let's say what's his name, Doug Burrell, they start or the city starts indicating that they have to stop putting on Airbnb, and they're going to watch Airbnb. They're going to keep an eye on it. If it's on there, they're going to shut them down. So what they're going to do is they're going to give them 6 months. Say you got 6 months to shut this place down. So because people probably have bookings in advance, right? So they probably got bookings. They don't want to hurt those people that have already booked and looking to have a vacation in Niagara Falls. But they will have a time frame to stop it, and they'll probably end up selling the house. Now there is a months of inventory more in Niagara Falls than any other area in Niagara Peninsula. So opportunities will be coming up, and I still think there's opportunities now in Niagara Falls to buy houses, because I think they got 11 weeks of inventory of versus 6 weeks of inventory in St. Catharines and other areas. So, but I do feel that the market will go up in months of inventory in Niagara Falls.
Couple more minutes, and we'll spend it on square footage differences in Hamilton and Toronto. And they're listed differently on the listing. Is that how it's working?
Yeah. What drives me nuts is that the Toronto Real Estate Board, and all our listings go on the Toronto board, and on there it indicates that it gives you how can I say this? So let's say your house is 1,000 square feet. And so you have to circle one that says, oh, this house is between 700 and 1,100 square feet. Wouldn't you want to know exactly what the square footage of the house is? So they have they have a range. Now, Hamilton, they expect you to know within a reasonable amount. Like if you got 1,000 square foot home, they want you to put 1,000 square foot home. Now in Toronto, they've got a range. I don't like it. So I tell my agents, listen, you got 1,000 square foot home. I know you checked off between 700 to 1,100, but make sure you put in the remarks that it's 1,000 square foot home based on MPAC and whatever else, or measurements of yourself. So I just feel that and I understand why the Toronto Real Estate Board puts this, because there's probably been a lot of lawsuits where people moved in and they thought they were buying a 2,200 square foot home, but it's a 2,000 square foot home. I get it. I understand. But if the agent does his job right, which they should, then there wouldn't be that problem.
Sounds like an easy fix to me. You can listen to our show online through Spotify, iTunes, Google Podcast, Stitcher, and many more. Just search for the Golfi Real Estate Show in your favorite podcast platform and hit the follow button so you never miss an episode. Thank you, Rob, for another awesome show, and thank you for listening to the Golfi Real Estate Show. We're back next Saturday at 9 on 900 CHML.